Hey traders, John Howell here, and in today's video I'm going to be covering the stock market, what's coming right now, what's going on right now, and when it comes to the actual stock market, the differences between a trader who trades the market and an investor. And so many people actually get this wrong when they're approaching, say, today's market and this downfall. So I'm going to be talking about that and how you should be positioning yourself when looking at these markets right now. Or should I say how I'm positioned to benefit from this market right now. I'm also going to talk about silver and gold gold actually has a pretty powerful pattern that actually says that if certain things happen, we could be getting ready for another big up move in gold. And I'm going to be talking about the two stocks I like. In fact, one of the stocks I just recently purchased with options, and I'll be talking about those stocks that I like. So I've got a lot to go through in today's video, so let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it right now. The first thing I want to cover is the actual general stock market and what's going on right now. The first thing that I do see when it comes to the actual stock market itself is that we've had this big move down. If I bring up the weekly chart here on the Dow Jones, we are definitely we're at a couple of different levels, right? You can see how the Dow Jones right now on the weekly chart is definitely holding this sort of $21,000 to $20,000 level area. And you can see how it's holding this level through. Now, interesting is it actually broke below this level through here, and now it's holding here. So if we do hold here even more, maybe for next week, maybe even next couple of weeks, and then suddenly we break back up, if you guys have been involved with the markets right for a while, you know that that's a bit of a what we call an end of trend indicator, where the market actually has a bit of a low level through here. The market flushes down to get all the stops, and then we actually break back up. So I'm not saying that's definitely going to happen, guys. I don't know what's going to happen. I'm just reading what the market's saying. But what I'm saying is that if we can hold there, and if we could do that and then spend maybe another week here to definitely get a bit of a movement through here, and then we start to get a movement back above 22,000, that's the thing that tells me that now we're getting ready to come back up to here. Again, with over the next 12 months, not the next week, guys, or tomorrow. Okay, don't get your knickers in a knot. And we can see that's what's happening through there. But look at the S&P 500. On the weekly chart, we came down and pretty much almost tested that low. And we're at this, you can see how this is really holding this long-term support level here right now on a weekly chart. So this could be getting ready to hold a bit of a support before we start to see that snapback that we all know that's just around the corner. And the same for the Nasdaq as well too. You can see how the Nasdaq actually had a bit of a starting point through here. We had a support level here. Look what's happened. We came down through here. We do actually have this major low level through here. You can see how it actually broke below this sort of level, and we've come back down to find the support level. If we hold, this could be the snapback or this rally that we're all been looking for. Now, when it comes to the actual markets, guys, if you go study all the pandemic situations, the virus and stuff like that in history, you'll notice what actually happens, right? Like if I just bring up an example of, say, SARS. What happened with SARS, right? The market actually dropped down for quite some time back in 2003 when it comes to SARS. And then what actually happened is, and that was around the same time that's happening right now, right? Which is around March. Do you know around May, that was March, then April into May, we started to have a nice move back to the upside. And then into June, we've already been rallying for a couple months in when happened SARS. And then guess what happened? In June and July, when that actually happened, when SARS was happening, that's when the market, you know what, let me just share this actual chart with you. And I'm trying to give you a perspective on what tends to happen when we have these big major sort of pandemics here, right? So I'm just using this chart here to go back in 2003. So here's the situation here, right, when it comes to this here. So right around this situation, so the market was coming down here, right, February into March. This is when the whole SARS thing was happening, right? Massive thing that happened with SARS. And around about this time through here, the WHO came out and said this is a pandemic and all that sort of stuff, and the market sold off, right? February into March. But look at this thing through here. I want to share this with you. Let me actually bring this over a bit more, all right? Because it was, look at this here, right? So we had that, this is the whole thing here. This is when they said the pandemics happened, right? Back through here, guess what? If you go back and look at history, what was happening? All the shutdowns were happening. Governments were stopping travel and all that sort of stuff, right? Very, very, very similar situations. See, we can get a fair idea what's likely to happen. No guarantees, right? What's likely to happen moving forward. But go back and study the history, right? Because history doesn't repeat itself, it rhymes. And so we can see that's what happened with SARS, right? And the whole pandemic situation happened. And then guess what? After the whole pandemic things happened, then the market started to rally from April. We had a bit of a pop up through here. And then April into, say, June into July, as we can see through here. Let me actually bring this up so we actually can get a bit more, there we go, a bit more data. Right? So June, so this is March, and then June into July, we actually started to have a move up. And do you know, it was around the June-July period that it actually came out and said that that now everything has been contained. In fact, let me just grab the exact date. Right, so this is the exact date here, guys, and I want to share with you. Look at this thing through here, right? So let me just bring this off through here, right? So look at this here. This was the timeline that happened with SARS, and right, it's very, very similar to what is happening right now. And so as we can see, right, if we go back down to, so we can see that the whole pandemic situation happened around March 28th, towards the end of March. That's when, like, you know, the pandemic has been announced, and then now what? They're now beginning utilizing pandemic planning, right? This is March 28th, remember, okay? So all this time prior to this time, this whole 2003, things have been falling in the stock market. Now they've been doing a lot of things. There's been a lot of bans and so on and so forth. And so as you can see, right, so that was March, and then April into May, guess what? Things started to what? Pick up. And then guess what? It was July the 5th who announced that SARS outbreak was contained. Now, why am I telling you that? Because if I look at this chart through here, right, which was July the 17th, July the 17th was this day right here, okay? So if I bring up my little cursor again, all right, it was roughly around this day right there, okay? So let's look at this here, right? So this day right here was when they said what? Then when they said everything was contained. So the market is a bit of a leader in what's to come in the markets, right? So not only did we have this sell-off that happened in January, February, and then into March, but as soon as the whole pandemic situation, guess what happened? The market rallied, then flattened out a little bit through here, and then they came out and said it was contained. So what I'm trying to say is that if you think that we need to see everything completely settle down, then the market's going to say, and then the government's going to come out and say, you know what, everything's been contained right now and all that sort of stuff, you're going to miss the move up. You're going to miss that rally up, right? Because the market is a bit of a leading indicator. As you can see, right, the market's been selling for quite some time, and now sort of last couple of weeks, that's when things are getting at its worst. When things are at its worst, that's when it's time to invest, right? Not trade. And I'll talk about that in just a minute. So I want to give this as an example of, you know, what is going on through what actually happened through here in 2000 and that. And we can see from the timeline perspective, very similar situation actually happened here, right? So you can see back in March, we can actually, even after March, right? So you can see this here. If you go to the actual website, that this cd.gov about history SARS timeline, you can see what's going on through there. So I'm giving this to you guys because a lot of people think that they need to see, let me bring this back to you. A lot of people think that they need to see all this really, really, really good stuff happening fundamentally behind the scenes, and then the stock market's going to rally. The actual opposite. It's when the stock market does start to rally, as you can see in March in 2003, right? It rallied quite strongly. And when that happens, then we're likely to start to see, you know what? Everything's been contained. Now, why am I telling you this, right? Because we know, right? We know that probably around that June, July period, very similar to SARS, we're probably likely to start to see everything being contained. June, July, maybe even around August, right? Now, why is that important to you? Well, if August, June, July, say latest is August, where they're probably likely to be everything's been contained and everything's back to normal again, well then rewind 2 to 3 months prior to that in the stock market, and the stock market would probably have likely already rallied prior to that period. See what I'm saying through there? So when I talk about like I'm entering the markets, and I am in the markets right now, I am talking about an investing position, and I am saying that when I get into this, say for example the SPY, if in the SPY, for me personally, I actually bought. I had about 2.5% of my account I actually bought on options on this day through here. Okay, and then the market came down, and as soon as this day happened here, which was the pandemic day, I then loaded up big time in December options. All right, so I bought 2.5% of my account. I actually bought options here. So I was quite early, I'm gonna admit that. And these were June options, right? These are June options, which still look pretty good to me. Then the market rolled over a bit more. When the market came down, it was on this day right here. I actually bought another 2.5% of my account, so 5% on a June option, right? On a June option, which is out of the money. Now, guess what, guys? Guess what? Now, this is the differences between trading and investing, right? Trading is that I'm not trying to pick a bottom here. I'm trying to say, you know what? By June, I do believe we probably would have liked to see that rally back up. Now, if that happens by June, guess what? My options are going to be up very, very, very nicely. If we're looking at the timeline of what we said there, right? Because if you look at August, July, June, probably around April to May, we're probably likely to start to see that move up, right? So I'm not saying the move's going to happen right now. And then we've got the pandemic here. That was 2.5%. Then I actually went and loaded up quite big. I actually bought 20% of my account in total. So it was actually around 15%, but it was around 15% because I had 5% here. So it was around 15% of my account. I then went and bought December options through here. Actually, no, that's wrong. So 20% here. So I had 25% of my account in December options right on this when the market said it's pandemic here, right? December the 12th. So why did I do that? Once again, we may continue down from here, but I'm very, very, very confident by the end of this year, this big flash move down through here is what? We all know fundamentally everything's going to be contained probably around the June, July, August period, right? If everything follows SARS, it's probably going to be around that July period. They're already coming out with potential vaccines and all that sort of stuff right now, right? We're already starting to see a decline in cases and all that sort of stuff. You know, there's a lot of things happening behind the scenes. So all I'm saying is the market will rally probably 2 to 3 months prior to them coming out and saying everything is being contained right now. Makes sense? So I may be wrong in this situation, but I'm giving myself plenty of time. Okay, so this is in an investing position. A trading position is when I'm actually looking for a certain setup and I'm getting in at a certain time, I'm getting out at a certain time. With this situation here right now is I'm not looking to try to pick a bottom. Even if this market continues down here for another week, do I care? No. Why? Because even if the market continues down here for another week, and then 3 months later, 4 months later, remember December option, we've made a very big spike because everything's now picked back up and we made a very big spike. Guess what's going to happen to my options? They're going to take off like there's no tomorrow. And even if this thing here completely goes to zero, but my options in December go to 200 or 300% return, what's my account going to be like? Do you see what I'm saying through there? So that's what I'm looking at there. As a trader, we're trying to trade, we're trying to get in here. If you think that if on this dip right now that we're getting here right now, if you think that I'm trying to trade these markets or I'm trying to get in and trying to predict what's going to happen tomorrow or this week, that's the wrong mentality to have with this type of markets. If you're having that mentality, you need the exact setup, the exact entry candle to get in for a trading setup that you trade every single time, right? That's my trading system. But more for an investing purposes, I have a June option, which I am a bit worried about that option. I've got 5% of my account. And then another 20% of my account, so 25% in total, is in December options on this big dip through here. Now, am I right or am I wrong? I don't know. You guys now have the full story of what happens here. If we do end up getting a rally by the end of this year, again, by the end of this year, what am I saying through there? Everything's likely to be contained by when? June, July, August. So far, rewind 2 to 3, maybe even 4 months prior to that. That's when the market rally is probably likely to start. Makes sense? And then we all know after that, everything's going to be back to normal. Because when they say the whole thing's contained, what's happened 1 or 2 months prior to that? Right? Everything's now start to pick back up again. People are going back to work and, and all that sort of stuff, right? And then guess what happens for the rest of the year? Things pick back up again, and then and the market goes back to normal, and this thing's probably likely to race back up and close this gap. This gap will be filled, guys. Now, it may not be this year, it may be next year, but that's the reason why I've got December option to give me plenty of time. So I hope you can see what I'm doing here. One, we will get a bounce from this because it will be contained. Just look at a fundamental basis. And secondly, the market's a bit of a leading indicator, right? It was after the market dropped down through here that everything now has, this last week or two, everything now has been very, very, very pandemic, right? It was this day right here is when they said, when who came out and said this is a pandemic situation and all that sort of stuff. Makes sense, guys? So if you are positioned in this market for the snapback, for the rally, which will happen, okay, in every single flash crash, because that's what this is right now, right? This is a bit of a flash crash here. In every single flash crash, and even in every single bear market, especially when we get a very sharp move down like this, the reverse is generally as sharp. Don't take my word for it. Go back and look at history, right? I'm just trading based on probability and give myself plenty of time with my options. Make sense, guys? So even if this market does head down for another week, I haven't got it wrong. Come back to me in December this year and tell me that this dip here hasn't had a massive run from now through to the end of this year, because that's why I've got plenty of time. Make sense, guys? So that's the differences for trading, investing. If you're trying to trade this market, once again, you need to have a system that you follow. If you think that when I say, you know what, I'm getting into this market right now and the market sold off and people saying, oh, this guy's gone bankrupt. Firstly, I have 25% of my account in the SPY right now in total, and they're still active. So no, I haven't gone bankrupt, right? If you have, then you're the idiot for placing so much money in the markets. But secondly, guys, please don't be a sheep. Please don't follow the herd, and please don't think this market is just going to keep going down and down and down and down. Now, yes, we may get more downside over the next day or so, a week, right? But my investing positions where I'm not trying to pick the bottom, right? All I do know is probably by the end of this year, things are going to happen, right? Same for back in 2008 when the whole Lehman Brothers collapsed. That was around September, October, November, right? That was the perfect time to what? When everything was really, really bad, that was the perfect time to buy. The banking system was going to collapse. This is just the virus. Come on, guys. Seriously. The banking system was going to collapse. Lehman Brothers went out in 2008. Guess what? That was the perfect time to buy and hold for 1 year, 2 years, 3 years, 4 years, 5 with that sort of view. Why? Because we all know what happened. What ended up happening around that time? We all know that what the stock market did, and if I go back at this time, and I'm trying to share this with you guys to get you a bit of a perspective. Don't try, get your emotions out of the markets and focus on the logic of what's happening and what's likely to happen, right? So move forward. Let me go back to, say, a 7 day, right? So let's go back to here. Look what happened here, guys. Right? Look at this here. This point right here was when Lehman Brothers collapsed. Now, when you're investing, guess what? You're like, this is a perfect time. Lehman Brothers has collapsed. The banking system's collapsed. It's all over. Oh my goodness. Guess what? That was the perfect time to be buying, right? Now, was it the exact bottom? No. Did anyone know the exact bottom? No. Did it actually rally down a lot more after that? Yes. But if you bought stocks or bought the S&P 500 there and you had at least a 12-month view, this is say October, November, right here. 12-month view, would you have done good? Yes. This here was 12 months. This here was 2 years after. So if you bought stocks here without trying to pick the top, and then suddenly 2 years later the market was there, 3 years later the market's there, 4 years later the market's there, can you see how overall the investing positions, because you're trying to get in on a really good price because you know this is probably likely to rally back up, and then away we go. Okay, guys? So if you are getting involved with these markets, don't try and trade it. Don't try to predict what's going to happen tomorrow. That's too risky, way too risky, right? If I'm getting the markets, I'm getting for that at least to the end of this year, for that there, and I actually have some options that go for a couple of years overall. So that's what I wanted to share with you there, guys. We will get a rally, but the rally will happen way before they come out and say everything's been contained, as I've just shown you through there. In most situations, in pandemic situations, when the market has flash crashed like this, just like SARS in 2003, guess what's happened 6 months later? The market's had a big rally. So get ready for a really, really, really nice move in the market. It's going to be exciting. Okay? I'm not saying this week, all right? So pumpkins who's getting their knickers in a knot, just settle down, will you? So anyway, that's the differences between trading and investing, okay? Let's go have a look at silver and gold right now. Actually, let's go have a look at silver first, and then I'll get to gold. Silver right now, once again, has dropped below this low level through here. This could be our final low point before we see the big markets. What I would need to see is I'd like to see this do maybe 1 or 2 weeks just here doing nothing. So it has a bit of a base and then start to get back above this level through here. If we can get some sort of formation like this here, or even just a rally down and then a hold and then a rally back up, or like even on the daily chart here, right? A bit of a hold here for a while, and then we start to rally back above here. Guess what that's going to be? This is probably going to be the last final low in silver before we start to see some really, really, really big moves, which I'm really excited for. So if we get this push down here, guys, right where we're seeing right now, and then we hold and we start to rally back up, and especially if we rally back up towards the top of the 18,000 level there, this whole point through here would say this was the last final low for silver before we probably make our way back up to all-time new highs over the next 5 years, right, guys? So if you're looking at what I'm saying there right now, looking to take a position, firstly, have good risk management. Secondly, if you're looking at options, buy as much time as possible if that happens. And now I'm not telling you what to do, guys, because obviously there's risk of every single trade there, as you know, and there's no guarantees of making a profit there. So when we're looking at that, when we're looking at the situation, right, this here could be an amazing opportunity right now for silver. I personally I'm actually in silver right now. I have a couple of years worth of options already in silver. But guess what? If we start to get what I've just said there, right? If we start to get what I've just said there and we start to move back up into this level through here, that tells me this low here was that last low before a massive bull market that's going to probably likely to happen over the next 5 years, right? So that's what I'm seeing through there. Now let's go have a look at gold. Gold is actually really interesting because what I'm seeing here with gold, if I bring up my weekly chart, we can see here that overall with gold, we've been in this sort of low point through here. We've had this low point through here. We actually have had a bit of a resistance point through here. And now you can see how it's actually, we've already tested it as a bit of resistance here right now on the weekly chart. So what I've got here, firstly, I've got a bit of a channel. So I've got this low point, and then we've got this high point, which is a channel. Okay, so then what happened is with this high point of this channel, you can see how that this whole major level was resistance on the weekly chart. Then guess what? Then it found a lot of support. So we had a lot of resistance through here. Then we found a lot of support weekly buys through here. Now look what's happening, right? We're rejecting at this level. So this whole level here is a bit of a resistance to it. Now, going back to the daily chart now, if we can squeeze our daily chart up, if we can see what's happening here on a daily basis, how we're rejecting the level through here, if we hold here and we start to get a rally back up into the channel, so we start to get a back above into this level, we're probably likely to come back down, find support, and then rally back up to the top of the channel, which is probably up the top through here somewhere. So that's what I'm seeing through there. This could be a bit of a false breakout of this channel. We broke down. This could be that level through there, and it does look like we're getting a bit of a turning point through here. So if we get a break above this channel here, then Gold's probably likely to go for a very, very, very nice run. We're getting very close to everything being oversold through here in gold. So that could be something that I'm watching level through there. So if something like that happens and I'm looking to capitalize on that, then I could use the GLD, right? Same sort of thing. I go to the weekly chart. Let me erase everything off the screen there, right? Weekly chart. This is the weekly chart through here, as we can see. This is the resistance level through here. Okay, and we're at that rejection level through there. If I go back and create the parallel trend line, there through there somewhere. Okay, go back to the daily chart. This is what it looks like on the GLD. So once again, if we start to get back above, say, the 146, even to 148, we start to get back above this level through here, then that tells me this whole thing was one big false breakout, and then we're likely to rally right back up to probably at least back up to the highs up here around that 160 level there, which would be quite nice on the GLD. So there's a lot of good opportunity, guys, coming. So one, be smart about the stock market itself. I've got money in the stock market, but not all of it. All right. So you can see it through there. Now I pause there for a minute because I have two different types of trading accounts, right? I have one trading account that I just simply follow my trading system that I trade every single day. Okay. And that's what I trade, and then that's what generates income for me throughout the year. And then I have another trading account where I'm just doing the trades like I explained, like on the SPY. Make sense? So, but then I have that account, but guess what? I'm also using that account for potential longer term trades as well, such as silver. Silver gets there, I'm going to add that to that trading account. You know what I mean? Buying plenty of time and so on and so forth. So that's what I'm seeing through there. Now, the two different stocks that I'm actually liking, firstly is JP Morgan. JP Morgan, I actually loaded up on this day right here. Was it this day right here? No. It was on this day right here, I think it was. Yeah. So this day right here, I loaded up pretty big time with my actual long-term account, investing account, for December options in this one here. We're very, 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 very oversold right now. We're at two major levels of support. If I bring up my weekly chart, you can see we're pretty much very close to two levels of major support level through here. We had this bit of a flush down below this low level through here, and now we're sort of just creating a little sort of, we're holding here lots and lots of volatility. So I'm expecting to see this thing probably snap back. And again, I have December options on this one here, guys. So it's going to probably take a month or two for this thing to rally up. But when we start to get the rally up, we're probably likely to see a very, very, very nice move up. On a short-term basis, guys, I see JP Morgan getting to at least 120. That's not straight away. Again, we could go for another big dip in the actual markets, and this thing could roll over for a week. Do I care? No. Why? Because it's a December option. Because by December, I actually see this thing pretty much, you know, coming up and doing what? Coming back to close this gap through here. So that's the first one there that I'm seeing very oversold. Plus also Apple. Apple is looking Apple is looking really, really good. I'm hoping that it actually comes back down a bit more to find this level of support. I've got this sort of this level through here, as you can see. Right, so this sort of X marks the spot level through here. We've got support. I'm hoping Apple can come back down through to here first, get back down to there. Because if that happens, we're starting to get very oversold, but we're starting to get a lot of strength coming back into Apple. So Apple is one of the stocks that I really, really like. It's probably one of the most successful companies, cash-wise anyway, apart from Warren Buffett. that what's going on through there. So that's what I'm looking at through there, guys. I'm actually not in Apple right now. Again, I want to see a bit more downside to really, if I can get a bit more downside right here, that's going to be a really, what we call X marks the spot through here. And I'm getting a lot of sort of strength coming back into Apple right now. As this market's falling down, we're getting a lot of, I guarantee you guys, a lot of long-term investors are actually buying this to probably see this rally up. And once again, what do we have up through here, guys? Which is going to happen. See this gap here? Guess what? That will be filled. Is it going to happen this year? Probably going to happen this year, right? Because it's actually not that far from the highs. So there we go, guys. There we have it. Let's quickly recap this here. Stock market, if you're looking to be involved with this market to get the snap back, look at more for an investing position. Don't try and pick a bottom, because I don't really care about that, and let it go. That's the difference between trading, investing in the actual stock market itself right now. We could be getting some sort of a false breakout with the actual Dow Jones. This little false breakout below this level through here, we're holding here. If we start to see a rally back up and out, you know, a bit of a break below, so say for example this level through here, break back above this level through here, that could be the start of the move up. Also silver and gold. Silver right now has broken below this level through here, so this could be one final hooray for the downside before that massive 3, 4, 5 year bull market starts. And then also gold as well too, same thing as well. We could be creating some sort of a false breakout here before the market starts to see another move to the upside when it comes to gold. There's so many amazing opportunities. Plus also JP Morgan. I'm actually in JP Morgan myself right now. I told you where I bought with December options. And also Apple. I'd like to see a bit more of a dip in Apple. And then I'll be looking to probably get into some of that as well too. Again, long term, guys. When I talk about getting into these things such as Apple, JP Morgan, SPY, and stuff like that, guess what? They're more like December options. That means if the next week or two drops down, I don't really care, because I'm very, very confident by the end of this year, we would have seen a very, very, very sharp rally back out of this here. And all it's got to take is 1 or 2 months of very nice moving back to the upside to see things happen. Hey guys, this is what I'm doing. You guys may disagree, but this is what I'm doing right now, and I hope this helps you out. Guys, if you'd like to get some help from me, then I've just created a free trading course. If you go to johnsfreegift.com, then you'll be able to get that trading course. Start getting access to that trading course to learn some of the techniques I'm using here to help you move forward in a big, big way. See you tomorrow.